Morning friends, today I have a company called Powermech Projects Limited. It has bagged an order of 164 crore rupees worth. This was sometime last week, so it has to complete this uh, contract within a period of 30 months. It's This is for the commissioning and erection of TPS EPC project phase 2 at Koderma. It's not an export contract, so please forgive me for this mistake. This is P company P is 18.4, book value 619. The price that is trading at is 2.75. Its book value, return on equity is 23.8%. Sales growth for the last 3 years has been 32.327%, and the last 1 year it's almost 15%. Promoter shareholding is 58%. There's been a decrease of 4.5% in the last 1 year. Public is 13.36%. FII is 5%. DI is 23%. Return on assets 7%. Quick ratio 2.11. Current ratio 1.9. Earnings per share TTM, that is for the last 12 months, is 86. Inventory turnout 5.25, interest coverage ratio 5.08, long-term debt to equity is 0.17, asset turnover ratio is 1, cash of 440 crores, debt 348 crores. Company has shown a good profit of 107% in the last 3 years. Company has good revenue growth 32% in the last 3 years, maintaining a healthy ROC of 22%. Promoter holding is 58%. Strong degree of operating leverage, 5.74. So good job on that for the company. Liabilities 1,668 crores. Promoter holding decrease in the last 3 years. The share price is falling due to a combination of factors, including recent significant stock volatility, underperformance compared to the broader market, high hitting a new 52-week low, and concerns about potential earnings instability despite a strong outlook, which could be the causing investors to be cautious about the stock, its potential growth. Market underperformance. Stock is worse than the broader market trends. Technical indicators, the stock is trading below the key moving averages, indicating a bearish trend and potential further decline. Stock is expected experience high volatility, hitting a 52-week low. Earnings uncertainty. Man incorporated 1999. Erection, testing and commissioning of boilers, turbines and generators, balance of plant, BOP, civil works, operation and maintenance. The company undertakes ultra mega power projects, supercritical thermal power projects and subcritical power projects business units. The company has 5 strategic units, namely industrial services, industrial construction, infrastructure construction, manufacturing and heavy fabrication and mining. So mining is one of the new fields the company has entered into. Clientele Adani, Bell, L&T, Vedanta, Tata Power, NTPC, CCL, International, Mitsubishi, Siemens, L&T Power, Hyundai. So order book of 57,000 crores, including 2 MOD contracts of rupees 39,700 to be executed over 25 years. It's a huge long-term plan of 25 years. The contribution unit is as follows: mining. Well, mining is what is the business that is growing for the company. That is the new project that is doing currently. MDO Projects is a new entrant in the coal mining business, undertaken the following projects. MDO project KBP in June 2021. Tasra MDO project 2023, fundraising of 350 crores via issue on a QIP basis at 3,381 in October 2023. So it's a huge loss for the company after it is. It's a huge loss, when they've raised the funds in October 2023. In EPC business, the company has planned a capex of 690 crores, out of which 240 crores are raised through QIP, and the balance 450 crores would be raised through loan over a period of FY26, focusing on EPC contracts in infra segments in railways, water projects, roads, urban infra development and energy. It is trying to pour into fuel gas desulfurization. Petro wire ties up with EPC and technology players. So let us look at some further information. So this is the current trend for today. This is for the last 5 days. 12% in the 11 last 1 month. 44% over the last 6 months, and overall 33% in the last 1 year or year to date. This is the symbol of the company, Powermech Projects. These are some of the information that you could read through, available on the internet. We've been through this already, so you can take a look at it later if you wish to do so. You can read through the write-up again. Subsidiaries is information. Set up a Powermech Nigeria Limited company and GTA Powermech DMCC Dubai company. So these are the two joint ventures that the company has. Uh, then order book we've read through, tie-ups we've read through, Powermech projects, fundraising, capex. We've already been through all this. So high of 3,700, low of 1,700, stock P 19.4, book value 619, face value 10 rupees, ROC 23.8. Additional information here: sales growth 15% in the last 1 year, ROC again the same. Cash and debt, two additional figures available. Book value slightly higher here. Uh, Price to book value of 2.83, highest of 3,500 on 26th of August 2024. Then volume volatility 945 shares traded on April 2nd. It's mostly the trading has been under 900 shares over the last 1 year on a given day. Stock P of 44 on 26th August. Comparative industries: Ashoka Bitcoin, J Kumar Infra Project, Man Infra Construction. I mean, you can see the market cap is between 4 to 7,000 crores, and the price varies from company to company. So you can look at the face value of the share and the current trending price of the stock, whereas compare the ROC and the dividend payout and the order book are the 4 5 things that you should be considering before making a choice to stay input in the company or look at other investment options. Currently, I think the overall market sentiment is on the downward trend, which is the reason why most of the stocks in this industry have corrected and plunged in the last 6 months. Mostly all of them are in the range of 30 to 35% correction in the last 6 months. 6 months, a minimum, that is a minimum, and ranging to a high of 40 to 45%. So this is the price to book value. You can see most companies range from 1.5 to 3. So it's well, you can look at the options which have a lower price to book value. Stock P, I mean, here again ranging from low of 7 8 to about 25 30. Average is 25 or maybe even 22. Anyway, it's something that you can look into if something that is suitable and workable on the long-term investment point of view. So comparison, 32 being the highest, the lowest being about 10. So again, something that needs further investigation. Profit growth of 107% in the last 3 years. Revenue, we've been through all this as well. Okay, this is the dividend payout in the last 5-6 years. Consistently pays out dividend in the month of September, so something that you should look forward to. This is the promoter holding 60%, for the reduction of about 4 to 5%. So about 55% I think is the current investor holding, but we can just cross verify that again. These are the direct foreign direct institutional investors, invested in this company. See, promoter holding 58, public 13, DI is 23, FI is 5%, sales growth, profit growth, last 1 year 14%, ROE 16% average, 22%, 21, 22% average for the last few years, 3 years, debt to equity 1.19. This is very expensive. Ideally, a range of 10 or below is ideal. This goes to show that the stock is overvalued. Interest coverage ratio of 5. Promoter holding decreased. This is another set of companies that you can uh, compare the stock with. This is from a different website, maybe on a more broader scale. You can see market capitalization, price, PE. You can see Reliance Infra 500 price to earnings, which is very high. Price of 211, which means that the company is not making much of a profit. Market cap of 8,380 crores. So you can see it's ranging from 5,000 something odd crores, which is the lowest for this company, Powermech Projects. You have as high as 440 or 4,40,000 crores from Larsen and Toubro. You can see the ROC is one of the best in the industry, so comparatively you can make your comparison decision, though the price currently and with the price correction over a period of the last 1 year or last 6 months, the stock is still overvalued. There is no consistency in profits, and because it's possibly not a heavyweight in the industry, it doesn't have the future outlook of being able to increase its revenue and profitability month on month or quarter on quarter, year on year. That is the reason why the stock price is correcting. It's so overvalued. So you can see the sales have been inconsistent, come down, go up, and net profit also inconsistent, which is why it's impacting the stock price. This is the year-on-year comparison, though this looks better than the quarter-on-quarter comparison, but still the price of this stock is still pretty high. So you can see EPS has also improved over the last 12-month period from 78 to 92, which is shown a slight improvement. However, the next quarter or the last quarter of FY25 would be the thing we should be looking out on. Currently, the price is not stable, so there is a possibility of a further correction in the stock. Some figures that you can go by. Stock price is corrected in the last 1 year by 29%. Here again, cash flows, the reserves have increased in the last 2 years or 1.5 years. Liabilities have increased overall. borrowings have increased, which is why the total liabilities have increased. Debtor is consistent, working capital is consistent. It's on the downward trend, which is a good sign. I think that is all for it today, friends. Thank you for watching. Please share this with your friends, family, and associates who would benefit from this information. Thank you. Have a good week ahead.